Welcome back to Investing Talk Podcast.
Today, we're looking at Trilogy Metals. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, definitely leave it in the comments below.
So let's get into the analysis. Okay, look, with Trilogy Metals, you're not really buying a traditional business here.
Right.
You're basically buying a geological lottery ticket, one that, interestingly, the U.S. government just put its stamp on. We kind of have to start there.
Yeah, that's right. The first thing that, jumps out is the financial situation, or maybe the lack of one.
Yeah.
It's an exploration stage company, so we're valuing future potential, definitely not current cash flow.
Exactly. I mean, the numbers are pretty stark if you're used to regular stocks.
Yeah.
0 operating revenue. Nothing for the whole last year.
Wow, 0.
Yeah, so every dollar spent is just burn, which led to a net loss of, $9.18 million. That's an EPS of minus 6 cents. So yeah, it's a high-risk bet. You're betting on assets that won't actually produce metal for, years potentially.
Hold on, though. 0 revenue. Negative earnings. I mean, that sounds awful on paper. What are we missing? Why would you even consider putting money here?
Good question. You're missing the competitive moat. The reason you invest is the sheer quality, the scale of what's buried underground.
Okay.
Trilogy Metals owns the Upper Kobuk mineral projects, specifically the Arctic and Bornite deposits. Huge area in Alaska, like 448,000 acres.
Right, Arctic and Bornite. And what's so special about those particular spots?
Well, they consistently rank as one of the biggest undeveloped copper, cobalt, zinc, gold assets.
Oh.
Well, anywhere in North America, really.
Like Alaska.
But it's not just size. The crucial bit here is the high ore grades, really high grades.
And that means?
It means, down the line, potentially lower operating costs. It makes the whole project more likely to be economic, even if commodity prices wobble a bit. That high-quality resource, that's the company's anchor.
Gotcha. And it's an anchor that's tied to a pretty strong partner.
Yeah.
They're trying to do this all alone out there in Alaska. That must reduce the risk quite a bit.
That's absolutely critical. It's set up as a joint venture, a JV with South 32.
A global mining company, big player.
Exactly, a major. And this isn't just about funding. South 32 brings the technical know-how. I mean, they actually know how to build and run a mine.
Right.
Plus credibility with regulators, which is huge in Alaska. And, the reassurance that if this thing gets the green light, they've got the deep pockets needed for the massive construction costs.
So, okay, the JV with South 32, that's like the first big stamp of approval.
Yeah.
But more recently, there's been validation from someone even bigger, Uncle Sam.
Yeah, that's been the real game changer in the story lately. Just this October, the U.S. federal government, the Department of the Interior, specifically agreed to put in about $35.6 million into these projects. That's a serious chunk of change from the government.
Yeah, that's not just cheering them on. That's putting skin in the game. It's like the government saying, yeah, this project is strategically important.
It really is a geopolitical signal, isn't it? We're talking critical minerals here, copper, cobalt, stuff the U.S. really wants to source domestically.
Makes sense.
So that $35.6 million, it just reinforces how vital Washington sees this, especially with all the global supply chain worries we've had.
And the gears seem to be turning on that absolutely critical piece of infrastructure, too. Mm-hmm. Wasn't there an update in October about permits for the Ambler Access project? That road, that's the linchpin, isn't it?
The road is the key. Absolutely. You just can't get that high-grade ore out economically without it.
Right.
So any sign of progress on the Ambler Access project, regulatory progress, that fundamentally unlocks the value here. Any positive news there tends to hit the share price immediately. And the market definitely saw that shift.
It sure did. I mean, the analyst reaction was explosive. Look back at September. The average one-year price target it rocketed up. Like 118%.
Yeah, staggering.
Jumped from $2.70 to almost $6 a share. $5.92. That's a huge re-rating really fast.
Which kind of brings us neatly to institutional ownership. Because the story there gets, it gets really interesting. It's a bit of a paradox, actually.
A paradox. Okay, let's unpack that. We saw more institutions getting interested, but the total number of shares they hold actually went down. How does that work?
Yeah, it sounds weird, right? Think of it like a bit of a shuffle. The number of funds starting positions or adding to existing ones, that actually went up by about 5.8%. So more players wanted in.
Okay.
But the total number of shares held by all institutions combined actually fell by almost 14%. 13.74 to be exact.
So who was selling?
Yeah.
And who was buying up those shares?
Well, it strongly suggests that maybe one or two really big, perhaps older holders decided to sell. Could be an index fund that had to sell due to rebalancing rules, or maybe an early investor taking profits.
Wow.
They sold off a big block, creating liquidity. And that liquidity was basically snapped up instantly by funds with perhaps stronger conviction right now.
And we saw specific examples of these different views in the filings, didn't we?
We did. You had Paulson, for instance, a big name, holding on to a very significant stake, like 8.7%. That screams long-term confidence.
Right.
But then you had another fund, Old West Investment Management, maybe with a different strategy or time horizon, cutting their position by nearly 14%.
So it was a bit of a shakeout. Some big players left, but the ones who stayed or bought in really committed.
Precisely. And that's the key takeaway. The funds that did stay or came in showed huge conviction. Their average portfolio allocation to Trilogy metals actually jumped by almost 30%.
Wow.
So those who are in now are really in. It suggests the institutional money that's left is pretty solid, high-quality capital, likely aligned with that long-term vision.
Okay, let's look at the chart then. Because that kind of conviction, the volatility we mentioned, must be showing up in the technical picture.
Oh, absolutely. Technically, the outlook is pretty clearly bullish right now. You've got the 50-day moving average around $3.42, sitting well above the 200-day, which is way down at $1.96.
That's a classic bullish signal, the golden cross.
Exactly. It signals clear, longer-term upward momentum. The trend looks strong.
That momentum comes with a serious side order of risk, doesn't it? This stock isn't exactly a smooth ride.
Yeah, no, not at all. It's high-octane stuff. The beta is 1.86.
Meaning almost twice as volatile as the overall market.
Yeah, so you absolutely have to be ready for big price swings. I mean, we've seen daily moves up or down of nearly 50% in the last month alone.
Yikes.
This isn't just investing. It's almost like a leveraged bet on where copper prices are headed.
So for people looking at maybe getting in or managing their risk if they're already in, what are the key technical levels to watch?
Okay, so if the price does dip, the immediate support level, the floor you want to see hold, is pretty tight between roughly $4.48 and $4.74. If it breaks below that convincingly, then yeah, the bullish case starts to look a bit shaky. On the upside, the next hurdle, the immediate resistance, is around $5.50.
And then the big psychological number.
$6. Getting through $6 would likely be a major signal, potentially kicking off a new wave of buying, maybe chasing those analyst targets we talked about earlier.
Right. And this stock seems driven by specific events, by news flow. What are the sort of nailed down dates that near-term catalysts people should have on their calendars?
Yeah, there are definitely some key dates coming up. First is the Q3 earnings release, November 15th. Now, the numbers themselves will show a loss, obviously.
Right, no revenue.
Exactly. But what matters is the management commentary. Updates on project timelines, how the government funding is progressing, any regulatory news. That's what the market will watch.
Okay. And then just before Christmas, there's a really big one, structurally speaking.
Ah, yes, the big volatility trigger. December 19th, that's the Russell Index and ETF quarterly rebalancing.
Explain why that's such a big deal for a stock like this.
Well, for a smaller company, relatively speaking, with maybe less daily trading volume, getting added to or dropped from a major index like the Russell.
Right.
It forces huge passive funds and ETFs, the index trackers, to either buy or sell massive amounts of shares. They have to match the index. It doesn't matter what they think of the company fundamentals.
So it's forced buying or selling, creating potentially huge sudden demand or supply.
Exactly right. It's basically a guaranteed liquidity event, one way or the other. Then, looking into next year, January 9th, we get the next round of institutional 13F filings.
So that's when we'll see who really bought and sold during that recent institutional shuffle.
Precisely. That'll give us the definitive picture. And finally, preliminary Q4 earnings are expected around January 30th.
Okay, those are the hard dates. Now, what about the, let's call them the spicy catalysts? The rumors, the market chatter that can move the price even without official news.
Hey, the main one is always M&A chatter. There's just persistent talk about a potential acquisition or maybe a bigger strategic partnership, probably from another major North American miner.
Makes sense, given the asset quality.
Yeah, any big company wanting to lock down future copper supply, especially domestic supply, would have Trilogy high on their radar.
What else is buzzing around? More government stuff.
Yep, rumors about maybe accelerated federal grant approval for that Ambler Road. Getting it faster than the current schedule would be huge.
It's a big time saver.
Massive. Also, whispers about a potential resource estimate upgrade. basically officially confirming even more metal in the ground than already known. That would boost the asset value further.
And one more thing that could open up a whole new class of investors.
Right. ESG, because it's copper, cobalt, zinc, critical minerals for the green transition.
Right, batteries, renewables.
Exactly.
Mhm.
So there's speculation it might get included in dedicated ESG-focused funds. If that happens, it unlocks a potentially huge pool of capital that currently might not be able to invest.
Okay, we've talked a lot about the upside, the potential, but we absolutely have to ground this in the risks. This is speculative. Developing mines in remote Alaska is notoriously difficult.
Absolutely crucial to remember that. The main risks are the classic mining development ones, but amplified because it's Alaska. Permitting hurdles are number one.
Especially that Ambler Road.
Especially the road, then timeline slippage things taking longer than expected, and critically, even with South 32, there's still project funding uncertainty for the massive build costs down the line.
Let's just double-click on those permitting hurdles for the road. That's not a new issue, is it?
Not at all. The Ambler Access Project has faced major political fights, environmental challenges for years. Alaskan projects go through intense environmental reviews. You've got sensitive ecosystems, indigenous land rights. It's complex.
And delays have happened before.
Oh, yeah. Legal challenges, permits getting paused or reversed. If the permits get significantly delayed again, or if tough new conditions get added, the whole project timeline gets pushed back. And that just crushes the valuation.
And then there's just the risk of the sector itself.
Right. Exploration and development mining is inherently high risk. Full stop. Your investment is tied directly to global commodity prices.
So if copper tanks,
If copper prices take a dive because of a global recession or whatever, a high beta stock like this, it's going off the cliff much faster than a more diversified mining company. The huge potential reward comes with equally huge potential risk.
okay, so putting it all together, the government support, the world-class asset, the strong partner, but balanced against those very real permitting and commodity risks.
Yeah.
How do we sum up the investment case here?
Look, Trilogy Metals is definitely at a key moment, an inflection point. You've got these interesting institutional moves happening, that strong U.S. government backing, kind of de-risking the politics a bit, and major regulatory milestones coming up fast.
So the near term is really about those events.
Absolutely. That Russell rebalancing in December, any news on the permits, any partnership updates, those are going to be the big drivers for the share price in the next few months.
So the final verdict is now the time.
For investors comfortable with the risk profile, we see the outlook as pretty bullish. Let's say an 8 out of 10, maybe.
For aggressive investors.
For aggressive investors, yes. It looks attractive both for shorter-term plays on these upcoming catalysts, like the index rebalancing, and as a longer-term structural bet on the whole battery metals theme. It's just a pure play leverage on future copper and cobalt demand, underpinned by a genuinely world-class asset.
Fascinating stuff indeed. All right, to leave you with something to think about after listening. Given how closely Trilogy tracks commodity prices, how much of a big, sustained copper rally is already baked into the current stock price? And what happens to this high-flying, high-beta stock if that rally suddenly runs out of steam?